This chapter introduces you to the auditing and accounting requirements that an FSP must adhere to. We look at the maintenance of accounting records and preparation of financial statements. There is an onus on the auditor to report irregularities or similar suspicions to the registrar. Section 19 of the FAIS Act stipulates the accounting and audit requirements that an FSP must adhere to, which are: maintain a full and proper accounting records on a continuous basis, brought up to date monthly. Prepare annual financial statements which show the following: 1. The financial position of the entity at its financial year end. 2. The results of operations, the receipt and payment of cash and cash equivalent balances. 3. All changes in equity for the period that ended. And 4. Any additional components required in terms of South African General Accepted Accounting Practices issued by the Accounting Practices Board or International Financial Reporting Standards issued by the International Accounting Standards Board or a successor board. And 5. A summary of significant accounting policies and explanatory notes on the matters referred to previously. Section 9(2) of the Act requires that FSPs must have financial statements audited by an external auditor approved by the registrar. The financial statements must fairly represent the state of affairs of the provider's business and refer to any material matter which has affected or is likely to affect the financial affairs of the provider, and in addition must be submitted by the FSP to the registrar within 4 months after financial year end. The financial statements to be audited and reported on mean the annual financial statements as set out in the Companies Act and annual financial statements as set out in the Closed Corporations Act. Financial statements for all other providers are to include at least the following in one of the official languages of South Africa: 1. A balance sheet and notes thereon. 2. An income statement and notes thereon. 3. A statement of changes in equity and notes thereon. And 4. A cash flow statement. Section 19(3) requires FSPs who hold money and or assets on behalf of their clients to maintain full and proper accounting records of these and to submit an audited report together with the financial statements in the prescribed format. This report must include the following: 1. The amount of money and financial products at the year end held by the provider on behalf of clients. 2. That such money and financial products were throughout the financial year kept separate from those of the business of the authorized financial service provider, and report on any instance of non-compliance identified in the course of the audit and the extent thereof. And 3. Any other information required by the registrar. The aim of Section 19(3) report is to ensure that clients' assets and or monies held by a provider are protected from unauthorized use and kept separate from the provider's business funds, and also to detect any non-compliance with the Act in respect of those monies and assets. Section 19(4) states that an auditor of an authorized FSP must report to and inform the registrar in writing of any irregularity or suspected irregularity in the conduct or the affairs of the authorized FSP concerned, of which the auditor became aware in performing functions as an auditor, and which in the opinion of the auditor is material. Section 19(1) of the FAIS Act requires that the FSP keeps the accounting records updated on a monthly basis. Part of the key individual's responsibilities is to ensure that there are adequate processes and procedures in place to facilitate an infrastructure to update the monthly management accounts and to report on it. It is also important to ensure that the processes and procedures allow the auditing firm, accounting officer, to be organizationally independent from the FSP and able to maintain an objective frame of mind in accomplishing its responsibilities. Section 19(4) requires an auditor to inform the registrar in writing of any irregularities or suspected irregularities in the affairs of the FSP. Chapter Summary. FSPs must ensure that the principles relating to accounting and auditing are adhered to. Accounting records must be updated monthly as required by Section 19 of the FAIS Act. Financial statements must be prepared to reflect the financial position of the entity at its financial year end, results of operations, receipt and payment of cash, and cash equivalent balances, additional GAAP requirements, summary of significant accounting policies, and explanatory notes. The auditor of an FSP must report to and inform the registrar in writing of any irregularity or suspected irregularity in the conduct or the affairs of the authorized FSP concerned, of which the auditor became aware in performing functions as an auditor, and which, in the opinion of the auditor, is material.